Hi friends, good evening. Today I have an update for a company called Samhi Hotels Ltd. The stock of the company, which is under 200 rupees, skyrocketed 13% after FII offloaded 3.94% in a block deal. Uh, the shares of the provision small cap company fell up to two. Oh, sorry. There's some sort of confusion here. What I can see is that the company has lost 4% value as the foreign institutional investors offloaded 87 lakh 21,414 shares via a block deal. Uh, the company was trading at 180 rupees per share, increasing about 2.2% as compared to the so it's not an increase. I think it's a drop of 202% and 2.12%. So that is one of the reasons for the fall. More specifically, uh, Blue Chandra Pte, foreign institutional investors, offloaded the entire stake, which is equivalent to 3.94% stake in the company at an average price of 175. The transaction valued at 153 crores. Moreover, the 3.94% stake was acquired at the same price by prominent investors, including LGT Select Funds, BofA Securities Europe SA, CBJ as a trustee for the SMBCTB, Emerging Markets Impact MF, Citigroup, TT International, Steinberg India, Tata Mutual Fund, reflecting strong institutional interest. So recently the company announced a strategic partnership with GIC to launch a platform for upscale hotel assets in India. GIC will invest 752 crore for a 35% stake in three subsidiaries, Courtyard and Fairfield by Marriott, Bengaluru, OR Hyatt Regency Pune and Trinity Hotel Bengaluru, valued at a combined enterprise value of 2,200 crores. Additionally, out of the 752 crores investment by GIC, rupees 603 crore will be used upfront to reduce debt across Sammy's portfolio and cover minor deal expenses. The remaining 149 crores will be allocated over the next 2 years to partially fund capex for the dual branded Westin Tribute Hotel in Bangalore, Whitefield. Market and business update: strong office market expansion and record 77 million passenger movements drove PVR growth. Bangalore and Hyderabad see rising office space demand and air traffic, boosting future prospects. The company plans to double its upscale and upscale hotel portfolio from 1,000 rooms to 2,000 rooms. Ongoing expansions. The company expansions include 54 new rooms at the Sheraton Hyderabad, 22 at the Hyatt Regency Pune, 330 through conversions in Pune and Jaipur. Major additions include 530 rooms at W Hotel Hyderabad and Western Tribute Bengaluru, alongside renovations at the Holiday Inn Express Greater Noida. Samhi Hotels Ltd is an India-based firm that offers a hotel ownership and asset management platform. The company's hotel fall under the upper mid-scale and mid-scale segments. It has a portfolio of over 31 functioning hotels with 4,801 keys and a broad geographic presence in 14 locations across India. Important disclaimer: this information shared through the internet through this article is not of my personal opinion, so request you to consult a financial investor or broker for an expert advice into the information with regards to investing as a part of your portfolio. So we'll go through some more information here. There you go. We'll share some information. So 180 is the current price. The stock is about 2.3% down today. Overall 0.7% in the last 5 days. 20% positive return in the last 1 month. Minus 1.7 in the last 6 months, and 8% negative return in the past 1 year. So this is Fairfield Marriott, one of the hotels that the company has made a premium debut into. Uh, this is the logo of the company. This is exactly how the logo shows. Smart Hotel Investments, Samhi. Then ownership strength is slightly missing the benchmark. Stock market price justifies its value. Company is highly inefficient in case of asset management. Company may not be able to sustain any adverse conditions. Book value 127.6, cash of 81 crores, debt of 362 crores, earnings per share 12 months 4.3, sales growth 46, return on equity minus 4%, return on capital employed 2.2%, profit growth 22.47%. Here FII holding and public holding is almost 86%. So there are high chances that the company's stock could be highly volatile in volume and in price. It can be found in the oversold zone anytime. So something that you need to keep in mind. Promoter holding is zero, which is something that shows that it is entirely dependent on the actions of the foreign institutional investors. If they feel that the company is not giving them profit, and there is a high chance of value dropping, then there is a possibility they can offload their share, and there are multiple foreign institutional investors invested in that company. So these are some names that you can compare as peers in the market. SEM is a prominent hotel ownership and asset management platform, has long-term management arrangement with Marriott and Hyatt. Prominent branded hotel ownership. Okay. Current price. So this is already what we've seen. Return on equity minus 140%. So that could be possibly because of some investment or some uh, investment done by the company in a property. Stock is trading at 3.72 times its book value, low interest coverage ratio. Peer comparison again. You can see the net profit has improved from 4 crores to 13 crores, from 13 crores to 23 crores. While the overall sales have improved, revenue has improved slightly, though it has been more or less consistent between 250 to 300 crores. Operating margin slight improvement, however tax percentage is uneven, low probably. That could be one of the reasons why the company may be showing a profit. Again, this would be subject to demand notices that the company may receive in the future. Earnings per share about 1 rupee, which is so far the best in the last 1 year. You can see minus 40 earnings per share in the year 2023, FI 2023, then minus 10 in FI 2024, then 2 positive of 2 rupees 32 paisa in the last 3 years. So the first year that the company is showing profit here, I presume more to do affected by the COVID-19 crisis. Then you can see sales growth of 23%, profit growth of 120%, stock price of minus 8% in the last 1 year, return on equity minus 140%, something to look into. Reserves have increased, which is a good sign. borrowings are very high, so again that will impact a huge chunk of interest payments and also the profitability of the company. So company would need more equity capital, which I presume some of it is going to be received by the company in the form of uh, investment by GIC. So that would help some part of debt to be paid off. Overall, you can see debtor days is 23, days payable have improved from 881 days to 644 days. Then working capital has not been very good with a positive or a negative. You can say negative means the company receives advance for its bookings. It had an advance booking of 280 days, which reduced to advance booking of 139 days, which further improved to which further reduced to 86 days. So the company is only getting paid upfront for 29 days. So it's a bit of a concern where the company was getting advance payments with bookings maybe 6 months in advance or 5 months in advance. That has reduced to 1 month, and the company is not profitable in the last 2 years. So that is a bit of a concern which the company will need to address. Then this is already what we've discussed: high volatility, high oversold zone, quite possible anytime in the future. Something to keep a track of. Thank you for watching, friends. If you have any comments to make the video and the content more uh, more informative, please do share with the comment below the video. Also, please share with your friends, family, and associates so they could benefit from this information. Thank you for watching. Have a great week ahead.